Oh, in case you were living in a cave and missed inflation, coming up hotter than expected. Gosh darn cocoa. Wedges don't work. Wedges is Patrick. Good morning. We got shrinkflation. Your Super Bowl snacks were shrunkflation. What? Don't go over that. Then I'll finish saying hi to people. Core inflation rate month over month. I was expecting. Again, you don't trade off of what you think's going to happen, but I was expecting higher inflation to start bumping up a little more. And inflation rate came in at 0.4 versus 0.3 expected. Core coming in at 3.9, annualized versus 3.7. Headline number at 0.3 versus 0.2, and headline year over years coming as expected. Red Book just came out, and that's a pretty substantial drop, 6.1 to 2.5. So that might be consumers starting to wind down even more, but we'll have to see if that's a new trend. All right. Thank you for putting in all that information, Sterling. See, even if you're a bull, you should like this because remember, now we start watching for the secondary reaction bounce back, which will tell us a lot of stuff, but it was way overextended. You should want these occasional pullbacks, especially if you're a bull, because that's what gets the bulls ample room to reload. You don't just want to keep chasing stuff higher. People, they go, I like the pullback. We don't have any major sell patterns yet. This could lead to something else. We've had some minor sell patterns. But look, we'll judge it on the secondary reaction. You've heard me talk about that all the time. So, just because a pullback is a healthy thing, the market goes straight down is not healthy either. You got to have the bounces. So, that's where we sit. All right, where do we sit now? We have, Coke. Coke was a beat. Coke is still up. Up with Coke today. So, and that would be Coca-Cola. Everything pretty much red for the most part. Shopify was a big gap down just with their earnings, by the way. Groups, let's just do a quick refresh, see what this is. Everything negative. Energy almost at neutral at minus, let's see, not much, but technology down 192 basis points. Oof. Comm services down 159. Fed watch tool, let's do a quick refresh of this. See, I know the Fed swaps are only pricing in like 4 hikes, I think it was. Now we have a pause in May. This is still pricing in potentially a cut in June. I think the swaps were pricing in one in July. But another cut in July. This has 4 cuts priced in now. 4 cuts through December. Fear and greed dropping from extreme greed to greed. Are we done yet? There, I said with Shopify was a miss, big gap down after a run up with the yesterday was party like 1999, and then the big reversal today. Coca-Cola still up on a beat. After the close, we got Airbnb, Robinhood, Lyft, but nothing that's really going to move the markets. And tomorrow morning we have Kraft Heinz, CME Group. That I'll be really looking at those two. All right. See, what does this do? This does not have done long-term technical damage. Could this be a start of something bigger? Yes. So, we had the lines. We had the longer-term trend line and the wedge line. The wedge officially triggered yesterday afternoon, by the way. And then we got the follow-through. By the way, there was also a little, I don't know if anybody was active for you. We're just add this on. Is because you see a little mini double top, paused, and then that just because it hits all the targets, that pot pattern is complete. But you can always trade further targets going down, but that was a beautiful double top. At least if you were saying, I'm not going to short that to take something off the table. And then when the wedge triggered, that was okay. I mean, and then we're down to the key target area. Now, we're sitting still. Can it go lower? Yes. We're coming into a fairly strong support area. If it does go lower, and this is still within the daily rotation zone. Remember, we're also at cycle tops with waning momentum and divergences. So this isn't shocking. It just needs an impetus. Now we'll start watching, not necessarily today, but we'll start watching when we do get the bounce back. how strong the bounce back pattern is. So, we're within the target range. We're within the target range right here. The next key areas, let's put on our bigger harmonics with a really nice topping bar yesterday. Look, we've also come down. Can you see this okay? Let me change the color. Let me change the color. So we're looking at the purple ones. Those are the shorter term. So we've just almost come down to the 50% harmonic. So anywhere we're going to start watching between the 50 and the 62.5. Which, the only thing that really puts a damper on that will be a close, well, 62.5, and which would really be close to close, well, the rotation zone also. So why? If you have a roadmap to how you're going to set up the markets and structure it and trade it, then you just do your analysis. And if you also look here, this other support level is right just below, so you got very key support in here. But 49.65 area, 49.65, 49.66 going in the open, if that breaks down, I have about 49.55 and then 49.41. 49.41 on a closing basis. And just for weekly perspective, you see we could be getting a rolling over in. I'm looking at this down here. Rolling over in the weekly cycles. And here's back to the daily, a rollover in a daily. So now we have a cycles in agreement, and this has been on a massive tear. Could this even come back down to 4,800 area and just be in the weekly rotation zone? Yes. Now that's going to do a little more technical damage, and it's going to require a stronger bounce for the bull to bullish patterns to really kick in again. But you know what? That's why we do our analysis. So just keep that in mind, please, on any bounce, and I will be seeing how this reacts at the open because we are against some very key levels. Let me pull off some of these other lines. We don't need them right now. Area of resistance is about 49.80. 49.80. And this is a huge clear path, by the way. You can see it. This is a huge clear path. And then I'd look about 49.85. And then you can do your retracements on this very long bar. Not even the whole thing. You can start watching this. So what I mean by that, if you did bounce back into the open, the key area, if this pushes lower, you'll have to move this down. But the key area you're going to want to watch, assuming, I got to assume something right now, is around 5,005. That's what it's really got to get back through before you can even get into short-term bullish mode, besides some bounce pattern. We don't have that yet. Here's your wedge triggered. There was also a mini double top yesterday, again on the NASDAQ right there, which was completely valid. Even the second target was within the move that started it, and then it just continued, triggering the wedge. Little sideways movement, then the CPI, coming back down to the wedge target. Right now, to the wedge target. So, let's just pull this stuff off. Wedges don't work. Wedges just don't work. Oh, well, so much for wedges not working. It's down below the 50%, so on any bounce, 17,675 is the first area I will watch for on a bounce, because that's a prior 50. The key area is 17,559 on the closing basis. Even coming down here, that'll be a very key area. You see a spike low there. 1, 2, 3, 4 spike lows there, and now it's a 2.5 harmonic. There you go. All right, so that's your very key area. If it does keep plummeting, besides using some other harmonics, the next retracement harmonic is 17,450. The bounce I just said,